Have you written your WAEC? Have you written your WAEC? Ah, okay, that's good. Um, so how have you been? How have you been going? How is your studies going? Last week. Okay, okay, okay. Well, that's okay, no problem. Understandable. So, can you share your screen? You are using your laptop, right? Okay. You don't have a laptop. You need a laptop as a trader, sure you know. You need a laptop. You need a laptop. Very, very important. So you need to get one for yourself. So alright, you're welcome, you're welcome, you're welcome. So what you are going to be doing today? Your assignment, I saw your assignment, but it's okay, but I want to correct some things over there. I want to correct some things that doesn't suit our our teachings. So now you let me start from afresh. Let me show you how to. I want you to see my screen. I want you to, if you have any question, you ask me. If you have any question at all, I want to do how to simply analyze US30 chart starting from the beginning to the end for you. You understand? So now this is US30. This is the US30 chart. This is the chart. Now this is the monthly. Before you start analyzing US30, you have to start from the monthly time frame. These are time frames that we have. I will just want to briefly show you before we now get to other things that we need to do. Right? These are all the time frames that we use. You can still get other time frames here, but these are the ones that I use. That's why I starred it, I favorite it, right? So now this is US30. First thing first, what will you do when you see that okay, you have opened this trading view? The first thing you need to do is, if you want to analyze this market, the first thing you need to do is, now you mark out your zones. Remember, I usually say that we have 7 conferences that we use for our analysis. Our conferences, number one, we use the market structure. We use the market structure, right? We use the market structure. Number two, number two, we use our key levels. You have to have this at the back of your mind. Study it to be at the back of your mind. The third one, we have our psychological level. Psychological levels, right? Number four, we have our Fibonacci, Fib retracement, Fib retracement. Number five, we have our candlestick, candlestick, right? Candlestick. Then number six. Number six, we have CNBC. CNBC, right? Then which other one do we have? Trend line. Thank you very much. Okay. Then we have our trend line. Trend line. We have our trend line. So these things now, when you come to analyze the US 30, these things are the things you look up to analyze this thing, to analyze this thing. Without this, you can't know what is happening here technically. Do you understand? Without this market structure, key levels, cycle level, fib retracement, candlestick, CNBC, trend line, if you don't analyze it, you can't know what is going to happen in this market, and you don't have any business here. So now, let's use this and analyze this. Like I told you, first of all, the market structure. Looking at the market structure, what are we saying? Where is the market going? From the monthly, it's going up, right? The market is going up. Then now we have understood that the market is going up. This one is done. We have gotten that the market structure is up. Then what next are we looking at? Key levels. So our key levels, we'll mark it out. These are the key level. We have the support key level and we have the resistance key level, right? Then this is where the market is resisting. Resistance key level. This is it. You mark it out. These are the major two that we need. This one, the highest support, resistance and support. These are support and resistance. These are the two things, the major two from the monthly. This is what we need. Then we don't have much here again. We'll now what else we'll do is we'll now move to the weekly. Remember, we have done monthly. We'll now move to the weekly. It's just 4, 1, 2, 3, 4. You understand that we need to do. So as we have moved to the weekly, what else are we going to look at? So now we have done key level. We have done key levels. Then we'll now look at where the market reacted. Where the market reacted. This is another place the market reacted. This is a psychological level. The market reacted at the psychological level. And what did I say about psychological level? I told you that psychological level is every 100 pips. Every 100 pips is a psychological level, right? So this is our psychological level. These are so many reactions here. Psychological level. Now, what else are we looking at? We'll look at we'll now see, okay, now we'll have to move down to daily because we have already done the key levels, psychological levels. So we'll now have to move down to the daily to see a clear view of the market. Now we have moved down to the daily. We'll move down to the daily. So what is the daily? What are you seeing in daily? You are seeing that, okay, now we need to bring down our our trend line. We need to bring down our trend line, right? So this is our trend line. This is our trend line. So now we have brought our trend line. What else are we going to be looking out for? Now what else are we going to be looking out for? Now we'll now use our we'll now move to the 4 hours. That is where we'll get a clear view of what we'll be expecting. This is a clear view of what we'll be expecting from the market. So now this is the looking at this. This is where the market reacted before it now went up to this level. This is the last resistance the market reacted to before it now pushed up. Can you see? This is the last resistance level. So now I will use my fib level, this place. I'll use my fib level and now check where the market reacted to this, drag it to this place to see where the market reacted. You see that the market reacted to, you see where we are now expecting the market. This is where the last this is where the market closed at. The market closed at 48,844, right? So now what are we now expecting now? What we are now expecting from this market is that if this market can push, can break this trend line, if this market can break this zone, this is a very strong zone. Let's say if this market can break this zone, based on what I'm seeing here, if this market can break this zone, if it can break this zone, give us a retracement like this, that means the market will be coming to the 61% level. The market should be coming to the 61% level. Are you seeing it? So that means we are going to be selling the market next week. We are going to be selling the market. If this market should do this, we are going to be selling it to the 61% or 50% level. Do you understand? But if the market doesn't do this, this is how you analyze. I'm just showing you. If the market, you now see if the market does not do this exactly, and now the market now came and do this, push up, break this 27%, which it might not likely happen based on what I'm seeing. You are expecting the market to get to 61. So now what do you do? Now you just have to come here, put your you come here. If you see this resistance, you see this retracement, you put your your stop loss here, then your TP. This is what I expected you to do. But your TP was long, your stop loss was long. You drag it. I cannot identify your stop loss. Your stop loss now is this red side, and your take profit is this green side. You understand? So you drag your stop loss to a certain level where the market cannot stop you out. You understand? If the market does like this is how you enter the market. Then if it goes away, if it goes up, but definitely I'm expecting the market to push down. But if it goes up, what else are you expecting? Like this. Simple. Do you understand? So this is what I'm expecting the market to do. This is what I'm expecting the market to do. And this is what I expected you. This is how to analyze the market. This is what I expected you to do and submit. This is the assignment I gave. This is just how to analyze the market. Do you understand? Then if you see that the market has come here, done something like this, give you a shape like this, then drop, do something like this. Then you enter here, you enter at this level. Then put your stop loss somewhere here. Do you understand? Is not difficult. The only difficult thing when it comes to trading is waiting. Waiting is difficult to wait. It's patience for you to exercise patience for the market to come to you. Do you understand? You wait. Waiting is a problem there. So now this is exactly what we are expecting from the market. So I'm gonna. This is how you analyze the market. When you analyze the market like this, wait for the market to come to you. Then you enter, right? You enter. So I'm going to clean this. Sure, you understood what I said. I'm going to. Do you have any question? Hmm? How do you calculate it? This is your ruler. Watch this thing now. From here, are you seeing these numbers minus? Let me do plus. Can you see these numbers that are changing? Hmm? Can you see? The easier way to identify it. This is your. This is your. Let's take for instance. This you bring out this horizontal line. Your horizontal line, right? You double click. You double click on it. That's 50,000. From 50,000. 50,000. Okay. You see that the price now of this market is 50,000. Where this thing is 50,000. Right? You see that is 50,000. So now you will now draw another horizontal line. You place another horizontal line. I'm showing you how you can get the psychological level. You will now double click on it again. Once you double click on it, you now type. It's no longer going to be 50,000 again. You now type 50,000, 50,000 and 100 because it's 100 pips. US 30 is 100 pips. The psychological levels are 100 pips. When it comes to gold, gold is 50 pips. But US 30 is 100 pips. And once you see that the market reacts every 100 pips in US 30. Every 100 pips in US 30. There is always a reaction. So now, you now type 50,000 100. Now, why you see this thing like this? You see, this thing you see now is psychological level. You see that this thing now from here to here is psychological level. This is 100 pips. Let's check it. Let's use our ruler. and mark it from here to here. Are you seeing it? Can you see that it's 100 pips? It's 100 pips. You understand? For you to you see that this thing now, why is small like this is because it's in 4 hours. Let me go to 5 minutes. You see how big it looks. This is 5 minutes. Then from here, see it. From here to here. You see? It's 100 pips. This is how to know the psychological level. Then if you see that market is 50,000, what should be on your head, or 40,000 or 30,000? What should be on your head that once this market get to 50,000, 100, there will be a reaction. Once this market get to from 50,000, 100, there is always a reaction. It will react a bit, 100 again, react a bit, 100 again, react a bit. There is always a reaction. So take note of that. So that is how to calculate how to check your psychological levels. So, but when you're on your trading, I said this thing before, in your trading uh, platform where you trade, like my own, this is where I trade, where I take my trade. You see, my own is already marked. It's permanent. My own is permanent. I don't remove it, like it's permanent. If you check, that's how your own should be. These are all the charts, all the trade that have been taken. You don't remove it. You create a particular uh, trading interface where you keep it steady. When you choose a pair, US 30 pair, you make it permanent on a particular one. Then other, you can have other ones that you can be using to to do your analysis. But this one alone should be for only where you take trade. So that is it. I have said this thing before. I'm just repeating it for you to understand it. I hope it's understood. So that is it. Dim Chukwemeka, you're welcome. Alpha. Dim, are you with us? So that is it. Do you have any question? Do you have any other question? Dim, Chukwemeka. Okay, so that is it. So that is why I told you that here is our psychological level. Why is it a psychological level? Double click on it. If you see that, if you put 600 here, it will still be the same place. Are you seeing that this thing is a psychological level? It's a psychological level. So that is it. So now, do you have any other question? Okay. Now, do you have a do you have a what's it called? Do you have MT5? Have you done your have you created a demo account? How much is in your demo account? Have you started trading? No, right? Okay, now I will show you how to, since you have already known how to analyze the chart, I'll show you how to analyze the chart. What I'm going to show you now, I will show you how to place a trade. This is the new thing I want us to learn. You are on practicals. I will show you how to place a trade. So while we are doing it, you will also be doing exactly what I'm doing. But today is Saturday. On Monday, I think on Monday, we are going to um on Monday, I will show you what you gotta do, and I want you to place a trade. Then I will see it. I will see it. I want you to place a trade when the market gets to your direction. Then you post it. I want to see it next week. I want to see it by next week. So I want to show you how you can place a trade, how you can take trade after you have done with your analysis, how you can place trade. Hold on, I'm trying to load the phone view so that you can see it from the phone view. Seems you are using your phone, right? Okay, now this is it. So this is my phone. So go to your MT5. This is your MT5. Click on MT5. Are you with me? Are you on your MT5? Go to your MT5. You are on practicals now. I want to show you how to take place trade. Are you there? Okay. Can you go to chat? Are you there? Are you on the same page with me? Are you seeing what I'm doing? Okay. Now go to quotes. Are you on quote? Okay. Once you click on quotes, you click on normally there should be you click on new order. Have you clicked on new order? Have you clicked on new order? Hmm? So now go to market execution. Have you clicked on market execution? Have you opened market execution? See what I'm saying? I'm showing you here. Market execution. I want to explain this for you. Open it. When you click on it, you open it. Market execution. You see market execution. You see buy limit. You see let's sell limit. Authorization what? Once you click on market execution, you will see another pop out. Like you will see buy limit, you will see sell limit, you will see buy stop, sell stop, buy stop limit, sell stop limit. So you see all those stuffs. So once you click on market execution, it will pop out. A pop out slide will come out. Then you see it. Can you see it now? Can you see it now? So you can't see it. Well, let me explain it. Then later probably you can go through it. You get you can go through the recorded videos. I'll drop it on YouTube. I will still send it. So now market execution. Once you open the chart, like first of all, US 30. This is our chart, our pair. You understand? So you click on it. Once you click on it, a pop out slide will come out. You see new order. Normally, if the market is open, this is weekend, the market is not open, you will see trade. You understand? But now I'm going to use new order to explain it. So once you click on new order, right, you will see market execution. Once you see market execution, it shows that okay, you want to execute the market. What does this mean? You want to execute the market instantly. That's what market execution means. You want to execute the market. If you are buying, you want to buy immediately. If you are selling, you want to sell immediately. Do you understand? That's what market execution means, right? That's what market execution means. So now, what buy limit means is you want to set an order that, okay, for instance, this market, if when this market gets here, you are saying that when this market gets here, here is our data analysis. Okay, you are saying for instance, when this market gets here, gets to this your point, you are going to be buying, right? I'm just giving you an instance. You say when this market gets to here, I'm going to be buying, right? So now what do you do? If you are not on your system and you don't want to miss this trade, you understand? You don't want to miss this opportunity when this market comes here. That's when buy limit or sell limit comes in. Do you understand? The same thing goes with sell limit. The same thing goes with sell limit, right? So now you can say if this market comes here, I'm going to be selling. I'm going to be selling this market because it's already at your zone of your POI, point of interest. Do you understand? The same thing goes to buying. So now what do? You come here, you come to your phone, come to buy limit. You click on buy limit. You want to set it, is an order. You want to set it. You click on buy limit. Then you come here, you choose This is lot size. You choose the lot size that you want to use. The amount of money you want to risk depends on the lot size you are going to use, and depending on your capital. Now you are using 10,000. You have $10,000 demo account. What your lot size should be is 0.05. Only one or two places. If you are using $10,000 account, your lot size should be 0.05. Then our risk is 100%, 100 pips. Then the price, you come here. Where do you put the price? You now come back here. You come back to your chart. You will see that, okay, when this market get to 50,500, I'm selling. Or when this market get to 49,000, I'm going to be buying, right? So now this market, now you now come to your phone. You come to the price. You input the amount, 49,000. So when this market now gets to 49,000, it will automatically start. It will automatically click you in. You understand? Then you come here now, put your stop loss. What should be your stop loss? You say that when this market now, what you say is that when this market now goes above here, 49, let's say 49,900, it should hit you out. It should take you out automatically. 49,900, because it's 100 pips. So you come back. You come back. You put your stop loss. That is why stop loss is here. You put your stop loss. Sorry. You input your stop loss, 49,900. That is your stop loss. No, sorry, 48,900. That will be your stop loss, because your price where you are buying is 49,000. Then your stop loss should be 100 pips minus 100 pips, 48,900. Then your take profit, that's TP. What will you put? You will now come here and say, okay, this market now, when it goes my way, I will be making, my take profit should be 50,000 for 500. That's where your take profit is. Or you can put it 50,000, 49,600. Once this thing gets here, 49,600, it will automatically close me out of the market. So you put it, it will automatically close you out. So now you come here, your take profit, you put it 40. What was our price? 49. Our price is 49,000. So where is our take profit? 49,600. That's our take profit, right? You now come and take your, you put your input your profit, 49,600. Now you are done. Once you input these things, you now place. We cannot place because